And that was another component of this passive investing, is I could start spreading that. Instead of having a couple $100,000 in one property in one place, I could then take these 50K increments and do 4 deals in 4 different states. And
hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I'm excited to have Travis Watts. Travis, how are you doing today?
hey, Todd, doing great. Thanks for having me. I appreciate it.
Awesome. Well, definitely appreciate you joining us. A little bit about Travis. He's a full-time passive investor. He's been investing in real estate since 2009 in multifamily, single family, and vacation rentals. And Travis is also the Director of Investor Relations at Ashcroft Capital. And many of you might know Ashcroft. We've had Joe Fairless on the show as well. Travis has invested in over 30 passive syndications between 14 different firms, and he now dedicates his time to educating others in the world of investing. Has made it into his mission to share passive investment strategies in order to help others achieve and maintain wealth in real estate. And let's dive in. Give our listeners a bit about your background. How did you start becoming a passive investor? And like, is that what you do full time, passive investing and investor relations?
Exactly. Yeah. So it was a sloppy start. We'll start with that.
Which is most of our cases, right? We all like just drank from the fire hose and started, and that's how it goes.
Yeah, that's the best expression really to describe it. I knew I wanted to be in real estate. Didn't know when, didn't know how. Didn't really have mentors, coaches, or a network or family that came from an investing background. My parents they came from a very frugal background. So I knew one side of the coin, which was how to save your money and live below your means and make it work, right?
Invest in stocks, bonds, and mutual funds. Probably not even stocks. The bonds and mutual funds are the
right. Yeah, there you go. Exactly. And have a financial advisor tell you what to do and how to run your life. So, so I, like a lot of folks, I started reading kind of the Robert Kiyosaki stuff and Rich Dad Prophecy, Rich Dad Poor Dad, all that cash flow quadrant. Those were some of the humble beginnings of opening my mind to this concept or this idea of passive income and being aware of taxes and these implications, trying to build something long-term that made financial sense. 2009 in September is when I got started, and I just bought a single family home. It was just kind of right place, right time. I was ready to, quit renting temporarily. I just wanted to try this thing out. And, it's funny because a lot of folks will tell me, oh man, look at you. You got started at just the perfect time. And I thought, I remember asking family and friends in September 2009, what do you think about me buying a home? And yeah, it was like, don't buy a home. You're crazy. Yep. You're crazy. Yeah. It's like buying the stock market back in March when it fell 30%. If you asked a lot of people, it's no, not yet. There's this big bottom out there. So, but here's what happened though. What gave me that decision, the comfort in making that decision, was this particular home I'm looking at. Previously it sold for about $165,000, and it was currently on the market at $95,000. And I was going to go conventional, 20% down, blah, blah, blah. Well, the government was also giving out $8,000 tax credit to first-time home buyers. Yep. This was the first year, by the way, that you didn't have to pay it back. I think in previous years, there was a clause where it needed to be paid back. This year, nothing. So, I'm sitting there running the numbers for myself and having to, for the first time, really make my own decision on, to leap or to stay, on the ship. And so, I took a leap of faith. That first home, I ended up house hacking. It was next to a college campus. So I thought, hey, worst case scenario, I rent the spare bedroom. And so I did that. And not because it was the worst case scenario, I just wanted to do that. And that ended up paying my mortgage, basically. My mortgage was like $640. I'm getting $600 a month. And it's like, holy cow. Like that, that was like firsthand passive income, experience. Right. And so that's where it's half education, but then it's half, getting out there and taking action. Right. So that was my first taking action. And then, as you said in my bio, I got into fix and flips, and I did some buy and holds, and I continued the house hacking stuff and vacation rentals. And I did a whole bunch of things actively, hands-on, self-managed, single-family townhomes, condos. And I burned myself out by 2015, so about 5-6 years in, because I was working a very intense W-2 job in the oil industry. It was, 14-hour days. I was away from home. I was out of state. I worked in Saudi Arabia and the Middle East. And, it just, at the end of the day, I'm trying to scale this portfolio up, and it's taking more and more of my time. And eventually I cracked, and I thought, I just can't do this. I didn't see the hope at the end of the tunnel, so to speak. So made a big pivot in 2015 to investing in syndications, private placements, multifamily, primarily value add type stuff, B and C class properties, and where I could just be hands off. That was the beauty of it. I literally, no more phone calls, no more managing tenants, no more spending weekends, driving, checking out properties, all that. And so from 2015 through today, I'm a full-time LP investor. To answer your question on that, yes, that's 100% of my portfolio are passive investments. So nothing that requires any of my time. And that's what I kind of help coach others on and educate on. Go ahead.
Are you still working in the W-2?
Good question. So no. So the first thing I did when I left the oil field, kind of a quick story about that. So I had all these single family homes and an oil field job that A, I didn't like doing, and B, I didn't see being sustainable anyhow, because as you know, oil and gas is such boom and bust. I knew I'd be laid off or fired or something eventually. It's just inevitable. So I thought, man, I got to do something about that. So that was the first time I really sat down with a spreadsheet, and I calculated my net worth for the first time and just said, hey, if I sold everything, all these homes, the house I live in, if I just went total liquid, paid all the taxes and commissions, realtor fees, what would I be left with? Okay, there's that number. What if I put that number into these passive deals? What's a conservative cash flow I might expect? This was back in 2015. And so I kind of used, I think it was like 8% number or something like that, annualized. And I never projected for equity pops or forced appreciation, any of that. I just said, hey, cash flow is the name of the game. And I realized I could leave that job. And so I did. And that led me to pursue other ventures. The first thing I did was work for a big brokerage firm, one of the biggest. And I got licensed Series 763, which is now expired. But I wanted to learn stocks, bonds, and mutual funds. I wanted to learn Wall Street and real estate. But I quickly kind of burned out on how that industry operates and the lack of, co-investment and those kinds of things. So sure. I was fully in real estate and preaching mutual funds. And I thought, no, I just can't do it. I'm not investing in this myself. I can't tell someone else to do this. And so anyway, that's inevitably what led to Ashcroft Capital. So part of their investor relations team, what that really was about though, was pre-COVID, going around nationwide to conferences and networking, building relationships with accredited investors, being a speaker, a panelist at an event, running the Ashcroft Capital booth to answer questions, things like that. It was a win-win. I love networking. I love meeting people. Introduces me personally to sponsors and deals and things as I get to share my passion and what it is I do and what kind of changes I've seen in my own life because of it. So yeah, it's basically working off of a passion and leaving kind of the old school, W-2 grind, so to speak, that I was unhappy with. That's kind of the evolution of it.
I love it. Sounds kind of like a dream, man. And that's great. That's great. I love it.
Hey, if you're looking for the best conference of the year about cash flowing real estate, then check out the North Star Real Estate Conference. It's going to be October 22nd through 24th, and it's going to be a virtual experience unlike any other because it's interactive. You get to meet and interact with the other attendees as well as with the speakers. We've got big name speakers too. So sign up today at nreconference.com and use the coupon code DEX, D-E-X, for $50 off.
Well, it kind of is. I mean, it's, you still have the same, human issues that everybody has. Right. We've got the down days.
Didn't just disappear.
Yeah, but no, it's truly, that's why I try to inspire people about this concept of financial independence, financial freedom. If nothing else, it gives you choices and options, right? Whether you want to move to part-time work instead of full-time, pivot careers and try something new, retire early, spend more time with family. Everyone has their why. But, for me, it had a lot to do with travel flexibility, giving back, and being able to be more passionate in what I do.
Awesome. Let's talk. I mean, my guess, you're working for Ashcroft, so likely you've invested with them. But when I introduced you, you've invested with more than just one sponsor. You've
Correct.
invested with 14 different firms. Is that correct?
Correct. Yeah. So Ashcroft didn't come along in my investment journey in this passive world till about maybe deal 5 or 6, somewhere in that ballpark. And I kind of took it slow in the beginning, but I've invested in 10 deals with Ashcroft as an LP. So definitely have kind of a wide array of knowledge around kind of who they are, what they do, and why I like that team. So that equates to roughly, as you pointed out, about 30% of my invested portfolio, a little bit less, but yeah, hefty amount with one operator.
So let's talk about vetting sponsors, because 14 different operators means you have to get comfortable with all these people you're doing business. So take me through your vetting process. Like, what are some of the key things you're looking for when you're looking for, is this an operator I actually want to put my money with? Because that's obviously a big question.
Yeah, 100%. So this is kind of my approach. I started, and by the way, for transparency, I didn't start doing this day one, which was kind of what I equate to some of my mistakes early on.
Right, drinking from the fire hose. You're just learning as you go.
Yeah, exactly. So what I come to find is, this is my opinion, personally speaking, I feel like the sponsorship team is number 1 in importance, and then the market would be number 2, and the deal would be number 3. And when I started, I had that backwards, right? So I was only looking at deals, trying to find the highest yields, and then just park money there. And then I realized it's not achievable if the team can't do it.
It's funny that you say that, because that's exactly was my investment philosophy when I started. It was first it was the deal, then it was the market, and then it was the team that I could build. And now it's the exact opposite. I've got to find. I'll probably go and look for the market that I want to invest in first. Then I want to go, okay, this is a good market. Then I'm going, okay, what kind of team can I build? Can I build the right team in this market? Because the answer sometimes is no. Like, I can't even, this is a great market, but I can't build the right team.
Yeah.
So why invest? And then it's the deal. Because if you're just searching for the deals, there's a lot of great properties that look like they're a 10 cap on paper and, hey, let's buy this thing.
Exactly. So I guess I just want to put that out there as kind of like rule number 1, or at least thought number 1, put that in the back of your mind. And then from there, what I discovered to me that was most important was writing down my actual criteria. So knowing, and this, this is a little bit deep. I mean, this doesn't happen overnight, but you got to think about your risk tolerance. You got to think about your time frame, and you got to understand that there's just about every kind of model out there. You can do new developments and value add and self-storage, mobile home, multifamily, single family. So you got to kind of understand from a high level what all this stuff is, how it works, and then what makes sense to you, as the investor. That's what's most important. And so, what led me toward Ashcroft was I had already done this exercise, and I had said something like, I can't remember it back when, this was like 2014, 15. I had said monthly distributions, monthly reporting, a team that I can get in touch with when I need to, value add properties. I like Texas. I like Florida. I like, to your point, right? I had done some macro level research on different states and markets. And then after I had discovered that, given that some considerable thought, then I went out seeking groups and operators that were doing just that. They may not check 100% of those boxes, although I think Ashcroft came pretty close in my criteria, but still, it helps a lot, right? Because now you're automatically aligning yourself in philosophy with someone else. That's kind of like a natural, it's like you're instant friends, right? Because you think alike. That's a huge first step before you get into all the due diligence and the background checks and the references and all. Like, think about yourself and your goals and what makes sense to you. I guess the underlying concept there would be invest in what you know and what makes sense to you. Because the one time I really got myself into some trouble, I invested in a passive deal outside of real estate that I didn't fully understand, looked pretty good on paper, could grasp the concept, but didn't know all the ins and outs, lost a ton of money, and it would kind of be like that, I don't know, cryptocurrency or something, for me anyway. I don't know that much about it. So for me to go put 100K in there, it's a 50-50 lose or win. I don't know.
You're just doing it because it sounded cool, or somebody says it was cool or whatever, but you don't really understand it. And that's really big. You've got to understand what you're putting your money into.
Yep, exactly. So
yeah.
Increases your chances of
I really
success.
like how you talk about that alignment, and kind of having the same philosophy. I find that really important too, as I'm talking with my investors. Like, I want investors that have similar philosophies to me, because if they don't, it just is not as good of a partnership, right? We're truly having a partnership. Now, if you've got people that have different goals or different thoughts, or they're going to need their money or whatever it is, it just is never the greatest situation. We want people to be aligned.
Yeah, 100%. And that's the thing, is that private placements are not liquid investments. It's not a stock that you buy today and then tomorrow read a headline and go, "Oh, I'm selling it." I don't want to be in it.
When can I get my money back? Well, when we sell or refinance,
right, exactly. So, great point.
Anything else on vetting sponsors? What you're really looking for? Maybe vetting deals, vetting markets.
Sure.
Kind of what
Sure. Yeah. And then in terms of, let's take it, I guess, a little bit on the market real quick. So what I do for markets is I do a macro level research. So I look at migration trends, where are companies and people moving to, what states are they leaving? I look for tax-friendly states. I'm a big fan of like Texas, Florida for those examples. You got to factor in this, the baby boomers and retirement, where are people going to want to be? You look for, affordable housing, diversified job employment. I mean, there's all kinds of things, but again, you don't have to be a master in all of this, but I kind of look from a macro level, what makes sense, just realistically, logically, what's happening statistically. And then I let the sponsorship group fill me in on the specific sub-market. I can't know every sub-market, why invest in Irving, Texas? I don't know. Never been there, and so what's that 3-mile radius look like? I don't know. What are the school rating system? I don't know. So that's what I kind of leave that to, right? Let the experts kind of do their thing. But from a high level, I already know there's a lot of reasons I like Texas. So fill me in on the rest. I'm like 90% there.
Cool. So know enough on the large level, then let the sponsors kind of go in and maybe do you a little bit of research, but you've already researched the sponsors. You got that trust in them. You probably can trust but verify their research there. What are your top markets today? Do you have any favorite? Can you give that away, or your secret? What are your favorite markets out there? Maybe, I don't know, 3, 5, 10, whatever you want to list off.
Lately, I'll take it this way. The most recent investments that I've made, say in the last 6 months, I've done several deals, have been Tampa, Florida. I've done 2 deals there. Jacksonville, Florida. Just suburbs of DFW, Dallas, Fort Worth, in various capacities. So I'm still bullish on those 2 states, but I'm not only investing in those states. I've got, Arizona, Ohio, Michigan, Colorado. I mean, there's a lot of states, but I'll put less exposure into a state that I'm, like the facts make sense, but I'm not super bullish on. Sure. Colorado's a good example. I love Colorado. I grew up in Colorado, and I would love to hold more here, but something that started getting me very uncomfortable when I was doing single family is knowing that I had 100% of my net worth in properties in a 50-mile radius in Colorado, one market, one state. And so you run into political risk and tax risk. And, what if, big tornado comes down the front range, knocks out all my property? I mean, you just have increased risk. And that was another component of this passive investing, is I could start spreading that. Instead of having a couple $100,000 in one property in one place, I could then take these 50K increments and do 4 deals in 4 different states. And that gave me a lot more peace of mind at night to think, even if a hurricane slams Florida, I got Texas, and then, vice versa. So
that leads me to another question with the passive investor front. You just mentioned you can take 50K here and there. I get some passive investors that'll approach me, and they've got a good amount of money that they want to invest. They talk about investing it all in one deal or a big chunk of it. And I always suggest, look, why don't for your first deal with me or with somebody else, you just put in like 50, maybe 100, just to kind of feel it. What are your thoughts on that? Does it make sense to put big chunk down, or is it better to kind of spread your risk out to 10 different deals, 5 different deals, whatever?
Yeah, sometimes I wish I'd, kept these licenses and kept going with that to be more of the financial advisor, which I'm not for full transparency. But yeah, for me personally, I can take it from that direction. So two types of people usually as a passive, those who are, still kind of working and earning, and then, they don't have a tremendous amount of capital, just 25 here, 50 there, 100 there, maybe. And then you've got folks that maybe sell a business and it's like, oh, I got $5 million. I'm kind of in a hurry to go put this somewhere, and that's the type of person I think you're more than likely referring to, tons of capital to go put to work. But here's a good example. I'm in a big investor group out in Colorado, and the facilitator he was this type of person. He had sold a company in the mid 90s, made bukus, but he told me one day when I'm asking him about syndications, he's one of my mentors. He says, I've never put more than 100,000 into any private placement. And he's done hundreds of LP deals, and his net worth might be 80 million, 100 million at this point. I'm not sure, but somewhere in that range. And that really taught me a lot about kind of, well, then who am I with my net worth to go put 300K into a deal, And the one time that I mentioned earlier, I got myself in trouble. I went too heavy. The deal looked good. The numbers looked great. I didn't fully understand it. And I packed like 175 in and lost like 40%. So I wouldn't have done that in hindsight, obviously.
Right. I mean, there's value in not only getting to know a sponsor, but spreading your risk out into different deals. Even if you go, hey, I really like this sponsor, well, why not do 5 deals with them versus 1 deal with them versus 2 or whatever?
Sure.
So what? I guess before we shift, anything left on vetting sponsors deals that you want to hit on?
I always try to ask the tough questions. First of all, always have a phone call, or if possible, a webcam call, or if we're not talking COVID land, a face-to-face, because it is the best. It is. And that's what I learned from these conferences. And that just made the biggest impact. Sometimes I can make a decision rather quickly after just a 15-minute face-to-face. But at the very least, leverage this free technology, Zoom and whatnot, and do that. And if you can't do that, at least do a phone call or two. But ask some difficult questions about underwriting, about what ifs, about key person risk, about recessions, about all this kind of stuff, break-even occupancies. Just kind of know the facts. Trust but verify. That's kind of my thing. And to the point of experience and track record. So I've invested with groups doing their very first deal, and I've invested with groups doing like their 40th, 50th, sometimes maybe even 100th deal. And so ultimately I do like track record and experience, but more importantly, I just like professionalism, that they can show me something as to kind of what past results have been, good or bad, by the way. And I mean, you got to understand that nobody's perfect. No team is perfect. No market's perfect. Sometimes these 30-year track record teams bring on a deal that just underperforms. It just happens. Floods happen, stuff happens, And so I can't judge someone like that. I can't look at like a prospectus of a company and go, wow, you had a deal go south. No way, man. I'm not investing with you. Learn from that. What did ask that question. What did you guys learn from that deal? What exactly happened? And kind of what's been put in place since then, to maybe ensure that hopefully won't happen again. Just ask those questions. Maybe they're uncomfortable, but they're worth asking. Because like we had talked about, 3, 5, 7 years, sometimes you're in a deal with a sponsor. And the last thing you want to do is make a rash, quick decision and then realize 6 months later, I don't like communicating with these people. That's the worst. That's the worst.
Yeah. Well, and to your point about like deals do sometimes go not as planned, right?
100%.
Probably more often than not, they don't go perfectly as planned. Hopefully they go better, but sometimes they go worse, right? And it's all about how does that sponsor react to it? How are they planning for it? And how do they communicate with you about it? Because if they're not communicating, that's uncomfortable for everyone, right?
Yeah. And I've had that come up too. A big thing I value is the transparency element, not just communication, as in they send a bunch of emails to you, but transparency, like even the minor stuff, like we had this incident that happened on a property, blah, blah, blah. Here's how it was handled. We just wanted to let you, be aware of that. I'm not talking about little bitty things, but things that are important.
We had a
The
mouse
last
in
thing
there
you want
too.
to do is get a quarterly update and say, well, 4 months ago we had 8 units burned down and we didn't tell you about it, but
Insurance check just came in today, so we're all good.
exactly. So hopefully a little more transparency than that.
Yeah, definitely. You've already mentioned, I guess maybe a couple mistakes, but what's another mistake that you've made in your real estate journey, and
Mm-hmm.
how have you learned from it?
Yeah, two examples. One would be in the single family space. I'll start with that. I had to realize something that was hard to realize, and that's that, quite frankly, I wasn't that good at what I was doing. So yes, I did the flips and the vacation rentals and the this, that, and the others. But if you were to take me and do a sample of other people around me doing the same thing, I was probably one of the least effective. If I'm flipping a home and getting a 20K profit margin, there's people doing it at 100K profit margin because they have better systems and more people and better connections and all these things. So I think some self-reflection up front to realize that, are you someone who should be active? Because there's absolutely nothing wrong with being active, right? There's so many great people that are great at certain things.
Yeah.
But for me, that was a misfit. And I think for a lot of active single family investors, it's a misfit. And it's hard to realize that. You really got to look, hard in the mirror and just think, if people are doing stuff way better than you, or you could potentially get similar returns passively versus actively, that might be something, to check into and, free up your time a little bit and leverage the expertise of people who dedicate their lives to this, people who are passionate about managing properties or sourcing deals or building broker relationships. To me, all of that was a burden. Like every one of the, like, it just gave me a headache every time I had to think about anything dealing with my properties. It was just, a misaligned thing. So self-reflect, figure out your own goals, what you're good at, what your strengths are, what they're not, and try to leverage other people if you can.
Yeah, I think that's so valuable right there, because everybody, look, you hear how real estate investing, it's a great way, and maybe it depends on who you listen to. And obviously, you listen to somebody that goes, "Oh, buy the house, do the monopoly, buy a bunch of houses, and then eventually buy an apartment or whatever it is." And so you get all these people out there that start buying a bunch of houses, and they hate it, and they can't deal with it, and they got their full-time jobs, and they got this burnout that happens so quickly, and they swear off real estate, right? And it wasn't because real estate was bad. It was because they were bad at real estate, right?
Yeah.
Or they just didn't have time. They didn't have that passion for it, whatever it was. But they were told, like, you got to buy some rental properties. That's the way to go. Well, get into real estate 100%, but do it whatever way fits your lifestyle, fits your personality. Like, you've got to do it the right way. Not all of us are meant to deal with tenants and toilets and that type of stuff.
Yeah. And something I hadn't thought about to that point, excellent point, is how many people are career focused, which I was too. But more importantly, here's a big difference. I was career focused in a career I hated and wanted to get out of. Well, that's a lot different than someone career focused that's passionate and loves what they do.
Yeah.
Think about all the doctors, the dentist, the lawyer, the attorney, the pro athlete. Well, should they really be fixing and flipping homes on the weekend and getting back to their practice Monday morning? I mean, it just, for so many people, that just doesn't make sense. So that's the education aspect of passive investing and private placements is, sometimes these are the perfect vehicles for those types.
Yeah. And that's why, what was changed over the last 10 years too, with all the podcasts and all the information that's out there is crazy. But when I first got in this business, I had no clue you could syndicate, like no clue I could even think of taking some of my profits from one of the properties I flipped and putting in this passive. Like, I had no clue that was even possible, let alone like actually raise money myself from people and put it into this like syndicate. And the education out there right now is huge, but still a lot of people have no clue what it is. And so it's just, it's continually doing this education, which, was just obviously what you're doing right now, which is really cool.
Yeah.
Where's kind of your goal? Like, where are you going with this? Between the passive investing, between the investor relationships, like what's the vision?
Yeah, exactly. So I've truly, genuinely fallen in love with the concept of just being a passive investor. And so I get asked all the time, like, when are you going to do your own deal? When are you going to become a GP? And I did, like, hopefully never, for me, honestly, because I don't want to do it. And as I pointed out, I'm not that good at the active side. I recognize that and know that, nor do I want to tie my time up into it either. So I've got some folks in my network that are 10 years, 15 years, 20 years beyond where I'm at. I mentioned the one there with the, 80 to $100 million net worth. So hundreds of LP deals. That's the direction I want to head. That's where I want to be. And I think that I wrote a blog recently, kind of, what is enough, for you, enough in financial terms. The point being, a lot of people hit enough at an earlier age. It could be 30s, 40s, 50s, what have you, but before the traditional retirement age. And I think that a lot of us want to continue being productive. You still want to give back. You still want to produce something. You still want to be creative. You still want your brain working. So my goal would be to remain passionate about whatever it is I'm doing. Okay. And whether it's multifamily syndication or passive investing stuff, it could be something different in 10 or 15 years, but with the idea that whatever that something is, it's my passion at the time, and it gives me fulfillment and joy, and to me, that's the biggest thing. Is passive investing, to me, is not about money. When you surpass your cost of living, whatever that is for you, beyond that doesn't really matter. It's just the ability of having flexibility, over your time and what you dedicate to. So that's kind of my goal. I don't have, I do have some goals that are more specific, kind of personal, with my wife and I, but in general, it's just the ability to travel and have family time and things like that. Yeah.
Awesome. Love it. I've been asked that same question too. When's enough enough? And my answer's always been when the world's a perfect place. That's when enough is for me.
There you go.
So I think I'll be working on it for a while.
Yeah.
What's like, I think what we're talking about, a lot of people would be like, that would be so cool to be just a passive investor, because I could do anything I want, never have to work ever. Do you work?
So I work in the sense of working on things like I described that I'm passionate about, that give me fulfillment. For example, I do these blogs. These blogs are not for revenue. I make zero off of it. I don't get any like leads off these things. This is like me thinking through concepts, philosophies, ideas I want to share, things that have helped me throughout my journey, and just giving that back and pushing that out. The other thing I do are weekly. I do these free 15-minute Q&A calls for networking purposes since COVID kicked in. It was conferences and whatnot. Now it's, hey, I still love connecting with people. How am I going to do it? Yeah. So that's what I've done is I've got this Calendly link I send out there to the world. And like this morning, I was on the phone with a 19-year-old, very nice lady out in California, just getting started. She tells me 6 months ago, I just had an epiphany that real estate is the answer for me. And I want to start, she said, I'm just diving into it. I want to learn it all. And so we talked about single family and it was fulfilling. It was joyous, but what do I get out of that? Nothing, but I got to give back, and that makes me feel great. And so that's kind of the purpose behind, quote unquote work. I think I'll always work on something.
I love it. That's cool. And that's what we all want, right? If you're doing what's going to make you happy and fulfill, I mean, that's what we're all looking for, right? What's a favorite book that you can recommend to our listeners?
Oh man, there's so many. I think, okay, so we can let's take 3 books real quick. One that was a very practical book that literally translated into a huge money savings for me was Tax-Free Wealth by Tom Wheelwright. I read that years ago. He's got a revised version with the new tax code. There are a lot of things I wasn't aware of that my CPA was never going to get around to letting me know because they didn't research it themselves. So that immediately translated into amending some tax returns and just doing business differently. So that's a great one. On the LP stuff and being a passive investor, Brian Burke wrote a book called The Hands-Off Investor that came out a few months ago. That's a great book that explains in a lot more detail what private placements are and this whole concept that we're talking about in a very structured, detailed way. For those interested in that. And then mindset, motivation, yada, yada. I've always been a big fan of Tony Robbins. And I think that Awaken the Giant Within is probably one of the best things he's ever written. He's written a lot of books, but that's probably the core of his whole philosophy. So try to hack your mindset and, how to find happiness, fulfillment, things like that. Awaken the Giant Within. So those are three.
So you led me to another question.
Mm-hmm.
I want to be a passive investor. I've got some money sitting around or whatever. I want to place it. But it just like the syndication thing sounds really cool. But how do I find people? Like, where do I go to find somebody to invest with? Because I don't know. I don't know anybody. They're not in my backyard that I know of. I'm sure there are, but I just don't know. Like, how do I find them?
Yeah, boy, this is a weekly question. I still struggle with it. I do. And because it's so different for everybody. Yeah. My approach doesn't exactly translate to what other folks can do. Going nationwide to conferences, that's expensive and time consuming, and who really has the time for it? So that's what I did, though, ultimately. There's online forums, there's your Bigger Pockets or, investorwhatever.com, these different things. Those are great to a point. This is a conversation I had about a week ago was someone approached me with a business idea to launch more or less like a Yelp review site for sponsors and syndicators, which concept I love. By the way, there's one already out there. It's just my fear is that without super heavy marketing, the exposure won't get out, but there's, I think it's called like crowddd.com, which is similar. You can search a lot of syndicators, but you'll get like 3 reviews on a sponsor that's well known, So until that could get to 100, 200, 300, 400 reviews, it's not that effective. But, it's tough. So you got online forums, you got, Zoom calls, web calls. Of course, you can just, like I said, make your criteria and then start Googling 506C, 506B operators, multifamily syndicators. There's kind of the long approach that way. My favorite approach, even though this may sound a little biased because it's me here, but reach out to someone doing it. Reach out to people like me. It doesn't have to be me, but reach out to someone who has partnered in 30 plus, 100 plus, 50 plus, and just start networking that way, right? Skip right to the top. Go to the people that are actually doing it real time and full time and just see who they've worked with and what the experience has been. And so I'm happy to do that, for folks. And that comes up a lot on my Q&A calls too. So I don't recommend or endorse. I don't say, and I'm not affiliated. I'm not getting kickbacks. It's not like that. It's just saying someone that comes to me, hey, listen, I'm non-accredited, therefore I can't work with Ashcroft Capital. Who else is out there in the industry doing 506B? And then I can provide, a list of 506B operators, not endorsing them, just saying, hey, there's some folks, if you reach out to them. So
cool. Awesome stuff. Yeah. I think I see that a lot, like Bigger Pockets. And I hear that question a lot, like, oh, how do I find other people? Like some people will reach out to me that we have a good conversation. Like, do you know anybody else? Cause I don't know how to find these people. So you hear that so often. And like I said, when I first started, it was like, I don't know, like, what is this stuff? Like a lot of people don't know.
Yeah, the other way I've been introduced real quick, one more thing I left out that's pretty important is I am in a lot of real estate groups, real estate meetups. Some are as big as, in-person events, by the way, at least before COVID. they're all online now, but like 400 people is probably the biggest group that I'm in. 400 accredited investors meeting once per month for a meetup. So that's one, all the way down to like the 8 to 10 person groups, and it's just, it does take a little effort, a little time, it's a process, but over time you start seeing the same names pop up. You start meeting some of the same people. I mean, it's a small world really, but it didn't seem that way in 2015 to me, but come to find it, it really is.
Cool. That's awesome. Last question before we wrap up. What are your 3 pillars of wealth creation?
My 3 pillars of wealth creation?
Yeah.
I should have got this question ahead of time. I should have read it. Give an example. What do you mean?
Honestly, you answer it however you want. Some people will talk about mindset. Some people will talk about, tangible real estate, business, stocks, whatever. So however you want to answer it. And I don't give it in front because I want to just see what comes to your brain.
Yeah. Okay. I got you. So one of my biggest things, the thing that I've found has made the biggest improvement is just the ability to self-educate. So that's been a huge one for me. And that's pretty open-ended, but whatever your path is, audiobooks, physical books, podcasts, seeking out mentors, real estate meetup groups, whatever. That'd be my number one, self-education. Number 2 is just having willpower and discipline. So just pushing through to realize that, hey, I might, so-called grind this out for 5 or 10 years or something, but ultimately that's going to be well worth it. And it's going to have a compounding effect long-term. And just to realize that, not to feel like you're in the grind till the day you die, because you just won't be if you really dedicate yourself to this kind of stuff. And the last thing is that, like I said, I went to go work, quote unquote, Wall Street. And, I really stacked up, honestly, the stocks, bonds, mutual funds world, how it works, the fee structures, the ebbs, the flows, the possible manipulation here and there, and the hype, and versus real estate, versus privately owned real estate. And I just think that real estate wins, it just does in my book. And it has in just about every way that I've used real estate, from living in it to renting spare bedrooms to flips, vacation rentals to multifamily to syndications, and even beyond, self-storage, mobile home, first lien notes. Like, real estate just is where it's at, and mostly because I'm a cash flow focused investor, and that's my passion, is just sharing passive income strategies.
So I got one more question, and then our last question. How are your vacation rentals doing today?
I sold them.
Oh, you did?
I sold the last one in 2017, I believe.
Okay, those went bye-bye with everything else.
Yeah, when I dedicated to passive, I thought, that's probably the most active thing I had. So
Cool. Yeah. All right, so last question. How do our listeners get in touch with you if they want to have a conversation, learn more, connect?
Yeah, the conversations we mentioned, the free 15-minute Q&A call, and a downloadable guide about understanding real estate private placements, just a quick 20-pager with terminology and a lot of the things that we talked about. Both can be found at ashcroftcapital.com/connect with Travis. And both are free. There's no upsells to either one. It's just my way of giving back. So feel free to reach out there. Additionally, I'm on Instagram and Facebook and LinkedIn and Bigger Pockets and YouTube and all over the place. So reach out on whatever platform works best for you, and I'm happy to connect.
Awesome. Well, Travis, really appreciate it. I love hearing from like this side of the fence, because I typically am hearing from, the sponsor side of the fence. So I really appreciate it. Love the conversation. Love the honesty. It was great. Definitely.
Awesome. Thanks so much, Tom. Appreciate it.
Have a good day.
You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience, and hopefully positively affect a ton of people out there that really need this and want this. So The other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.